Today is Thursday, July the 9th, and if you look at the McClellan oscillator, you can see that we've spent 1 out of the last 19 days below the zero line, or in the oversold area. We've really only gotten oversold, we've only really gotten oversold a couple of times, but we've only been above the zero line this one day out of 19. Today's volume was same as yesterday, but it was reversed from buying to a selling kind of day. As you can see here, just pretty much reversed. And the summation index, of course, continues to dip a little bit more south, and now we're below 3,000. So really, there's not a lot to talk about other than the NASDAQ. That closed at a new high. But that's pretty much all she wrote, right? That's the only good news out there. The Dow Jones continues to be in this channeling area, like we said we would be, between these two gaps. The S&P 500, we know the gap is closed, but we can't break out above the gap. So I'm going to move the gap just a little bit back here. The gap is no longer important. What's important is the trend line. And we came up and we touched the top of this trend line, and we moved back down, and we ended up just halfway between the highs and the lows by the end of the day. I'm still surprised that we haven't come back and tested the 50 or the 200, but you know, it still could be something in sight. We haven't taken a look at the cloud for a while. Let's take a look at the cloud, and we've got the Chiku span right here, which tomorrow we'll get support right around 78.6 on the Fibonacci's, and we finished above there today. So that's where to look for support, right around this 31, 36, 36. And resistance, of course, is on this trend line, which now pretty much is a developed, confirmed trend line. Apple had another pretty spectacular day. Could have been better, but it was rejected at the 161.8 and came down to finish on top of the 150. Caterpillar, you know, as long as this stock stays below 130, I'm happy with that, and it stays below 125, I'm even happier. But as I said in the tweet today, what we've got is two different sets of Gartleys. We have a completed Gartley, and we talked about this one a while ago. We had a completed Gartley. A Gartley is this first wave comes back up 61.8%. It stayed there for 3 days. Then it goes down somewhere in this area here. It could go all the way down to 92.30 and still stay in the Gartley pattern. And then it had its targets right up here around 127, and that's exactly where we had, which was a 1.27 move of this down wave. So that's complete. Then we started another one. So we had down here, we had another Gartley that came up to 61.8. We had another one that didn't quite come down to the C point, but it came into the zone to qualify as a Gartley. And now it's on its way back to either 130, well, both targets are in the 125 area. But we've fallen below the 78.6 Fibonacci, which is from this point down to, well, from here to here. So our Fibonacci is this point here and this point. So it's the XA wave is what we're measuring the Fibonacci on. And we've pulled back at 78.6. So Caterpillar really is trading as a very technically traded stock. I mean, two Gartleys going all the way back to January of 2020, the beginning of the year, has been nothing but a repeat of a Gartley pattern. And the volume has been tailing off, but it's all been negative. I have not added to FCX, although it did break above the 12.99 point again, but it didn't hold there. I need it to hold there for a couple of days before I buy it again, even if I have to pay $13.25, $13.15 is where I'm figuring that will be my confirmation to add more. and then it's going on to 1364. And I'll definitely be taking all of my trades off or putting on a trailing stop to make sure that I can recover the profits. Home Depot, still working in this pennant. That's good. Remember I have 245 and 250 calls that are expiring on 700 shares next Friday. So that's only 6 trading days away. And the stock is doing perfectly for both of those. Let's take a look at a few more. Amazon continues to just rocket above 161.8%. Who's buying at this price? This is an expensive stock. It's selling for $3,200. You know who's buying it? The market makers, because there's so many options being traded. The market makers are having to buy and sell the stock to balance their books. Facebook continues to struggle with 127.2, and the last thing we're going to look at now is the banks, and the banks had a pretty negative day. So overall, the market is telling us, it's negative territory. Now it's channeling time. The volatility index isn't changing. It's still staying in this area here, which we identified. Whenever it's in this area, there's no risk. Whenever it's in this area, there's chop. And that is certainly what we're seeing. Up, down, up, down, up,